Hello, my name is John Sleeting, and welcome to Clear Conversations, the Entrepreneurial Legacy. I'm an executive partner with Clearwater Capital Partners, and today I'm speaking with my longtime friend and partner, John Chapman, the founder and chief executive officer of Clearwater Capital Partners. John's journey not only inspired me and my family to become clients at Clearwater, but to further partner with him on a mission to serve individuals and families on their stewardship journey. My desire with these conversations is to provide the audience with a glimpse behind the scenes of successful entrepreneurial families, which can be a catalyst for learning and inspiration. Our guests will share their stories of triumphs and tribulations and how they achieve success in the world's eyes, but with an eternal perspective. To remind first-time listeners, what this podcast is not. It's not legal advice, tax advice, investment, philanthropic, car, real estate, restaurant, or travel recommendations. It's not advice at all, but simply conversations which may and probably will include all of those topics over time. So let's begin. And John, welcome. Thank you for being here. And even in my preparation and research for this conversation today, I learned some new things about you. So I want to read through this to make sure that I'm accurate about it, and then we will dive in. John grew up in Chicago with his focus on academic pursuits. His communication abilities were recognized early as an Orator of the Year in high school. You'll get a sense of that shortly as we dig in. John and I did a radio show back in 2010, and the back and forth was actually a fun time. So to be back at the table again is wonderful. John grew up in a working middle-class home and went to the University of Illinois, where he received a Bachelor of Science in Finance. John is a firm believer in competency development, and he's a lifelong learner who's engaged in formal programs such as the Certified Investment Management Analyst, the Securities Industry Institute, and Branch Management, both sponsored through the Wharton School of Business, Executive Leadership and Strategy through the University of Chicago, and numerous others. John's career began as a broker at Merrill Lynch, followed by his senior executive leadership roles with some of the biggest names on Wall Street. John's experiences were formational, both regarding what was good about the industry, but also the not-so-savory side. When John was running a major advisory group's Northeast region, he was based in Boston. Then a new CEO offered him the opportunity he could refuse, as he didn't want to relocate and head south from Boston. He came back to Chicago as his family was growing up quickly, and that was his priority. And at that point in time, when John came back to Chicago, his entrepreneurial journey began. So John, welcome. Thanks again for being here. Anything I missed in going through a bit of the background to set the stage?
No, that's right, John. You got it right. It's an honor to be here on episode 1. I think this is terrific, and look forward to the conversation.
So if we come back to that, moving from Boston to Chicago, bringing your family back to the area, why would you want to start a wealth advisory firm?
Well, and to be completely transparent and honest, John, that was not my plan. I was on a course in different senior executive roles on Wall Street, and I felt that that was going to be my career path for many, many years to come. And as you referenced, a new CEO came into the picture and wanted to relocate my family down to Dallas, where I had to start over again and had kind of a turnaround situation that he had wanted me to pursue. And I just couldn't get comfortable with it. As we've joked many times, Dallas was not on my wife's bucket list. So,
and just to pause there, right? For clients and families we have down in Texas, there's nothing wrong with Dallas, right? But for your family, that wasn't in the cards.
No, it wasn't. And we weren't going to be that family that chased a job. We moved once. I had multiple opportunities in my career to do the relocation thing. And not unlike yourself, it just wasn't going to work for me. I wasn't going to chase the job all around the country. So it was a bit of a moment for me. I didn't know what I was going to do next. I was in a fortunate position where separation from the organization I was with provided me with certain resources that I didn't need to worry about putting the food on the table. But it gave me the opportunity to take a step back. And while I thought I wanted to pursue another executive type position on Wall Street, I got into a very unexpected conversation with a good friend of mine who had been my accountant for many years. And as we were working through the deferred comp and the stock options and all the things that one has to work through in that situation, he asked me what I was going to do next and asked if I would be interested in coming back to Illinois to join him and his partners at a very successful CPA firm to build a wealth management capability. Their clients have been asking for it, and they really had no idea how to pursue it. Because of the things that I had done on Wall Street, they really did recognize I would perhaps have the knowledge to do such a thing, but I wasn't interested. In fact, it was kind of a funny story. I got off the phone, and I was joking with my wife, Julie. I said, that guy I was talking to, he wants us to come back to Illinois and start a firm. And she looked at me and said, well, what's wrong with that? It sounds like a great idea. So back to the drawing board. I engaged in further conversations, and the more we talked about it, the more we realized we really were thinking the same thing. And while it wasn't my intent, we became more animated, more excited about the possibilities because we were really we did have a shared vision for what that might look like. So that's kind of where it started, but it wasn't really my plan.
So going from the big corporate, senior executive level, coming to a smaller boutique accountancy firm that did a lot of mid-market audit and tax work, to really start, because you were the wealth management business back in the beginning, and so this thought process of this transition and this transformation of yourself and making that step, it's not an insignificant step. And any entrepreneur starts out and the odds are stacked against them. And I want to reference this article from a 2021 Forbes article. Just read a couple paragraphs because it really says that this is a challenge. So how did you go about your due diligence, the thought process to beat the odds? Because according to the Bureau of Labor Statistics, roughly 20% of small businesses fail within their first year. After 5 years, half of companies go out of business, half within 5 years. And only about 30% make it to year 10. There are many factors that can influence whether a company stands the test of time or whether it goes out of business after a few years. To succeed, entrepreneurs must make the longevity of their business a top priority. A successful entrepreneurial career requires more than just launching a company, which is what you did. It's ensuring it sticks around for the long haul. And now, celebrating 17 years in place. So when you do the due diligence on the front end, how did you think about the start? And did you just ignore the statistics and say, let's go? What was your mindset at that point?
Well, I think I'm glad that I didn't know those statistics at the time, because I might have thought differently about the challenge. But John, it boiled down to for me, with the reality that Wall Street was not interested in advice. In fact, back in the day, and still to some degree even now, regulators look at advice very differently than the way you or I perhaps understand it. They didn't really feel that advice was central to the client-advisor relationship. In fact, the regulators had a word for it. They thought of it as being incidental. Whether it happened or it didn't, the customer was paying for a transaction. I just thought that was very backwards. And Wall Street and their lobbying efforts really did not want the responsibility of a fiduciary standard or anything that looked like that. And they kept pushing back at it. And so I guess the idea that got into my head was maybe I could build the firm that Wall Street was not interested in, that I could build it for the client, around the client. I had in my mind then, and it persists to this day, that there are two fundamental elements that I wanted to pursue, and neither of them were negotiable, and that is character and competency. If we could build an organization for the client, around the client, and deliver character and competency, we could succeed. Because if you think about it, for any length of time, one without the other of those two things doesn't really get us very far.
Right.
I've known a lot of people in my career that were really, really smart, but I couldn't necessarily trust them or trust their motivations.
Right.
I had another group of people that maybe were very well intended, but they couldn't do the heavy lifting, the competency things that this industry requires.
Yeah.
So if I could get those two things right and build the firm that Wall Street wasn't interested in, perhaps we could change the game. And here we are 17 years later.
Yeah. So if you go back 2006, you founded the firm. We became clients in 2007, right, the following year. And it's exactly that was so attractive to Melissa and I. She's an artist by trade. She hates all this stuff about, how estate documents and taxes and how to think about, the total balance sheet and what does that mean for the kids and if something happens. And so that's what attracted us back in 2007. But as I was working through things with my separation from GE when it was the ultimatum of moving or else and being here. And I'm coming to you now as a client in that advisory capacity. And we hung up the phone after we got done talking about options, restricted stock, and all those sort of things. And you picked up and you said, would you ever be interested in coming to this side of the financial world? I would have never imagined it. You knew the inside and the behind the scenes, but sitting in the bleachers and knowing what I'd want from the family side, I knew I didn't want to deal with most of the organizations that were out there. But it's why we engaged you to become clients in 2007, and then in 2008 when we were going through the financial crisis and having these conversations. It made all the sense in the world then to come and partner, because your George Costanza discussion, right? Do the opposite of what everybody else is doing and what the industry tells you should do, and how you approach that. And the other thing, John, that you said was you have to have a burn the boats mentality. And I think that's so important for entrepreneurs if they're going to move forward. So what is a burn the boats mentality?
Yeah, it's one of my favorite stories, John. You've heard me say it many, many times. But you have to remember, in 2006, the idea of independent RIA firms was not what it is today. There was no roadmap. There was no checklist of things that one had to do. In fact, there was really no platform at all, and we were making it up as we went. So I felt that I had to have a conviction or a sense that there was no turning back in order to persevere and to push through those difficult moments where blazing the trail was very, very difficult. I'm not going to kid you, it was fun, but it was also an enormous, enormous challenge. So the saying, burn the boats, goes back to a 16th century Spanish conquistador, Hernando Cortez, who in leading his military and his men into battle in Central America, his first order was to have them burn their boats. And again, the context is many times they were outnumbered 100 to 1. And I can only imagine being one of his soldiers and wondering, why are we burning these boats? We might need them to get out of here if this doesn't go particularly well. And I think the genius or the brilliance of the Burn the Boats command had everything to do with the fact that there is no going back option. I knew for myself, for instance, that once I left the executive track on Wall Street, even for 2 or 3 years, my sell-by date would have long passed, and I would not have had an option to go back. So by making this choice to step away from Wall Street and a number of, I would imagine, very profitable and interesting opportunities that might have come my way, I was making a career choice that would forever change my life and the life of my family. But there was something in there, John, that also I would share with you, and that is the circumstances of my departure from the firm that I was working with in Boston just prior to making this decision. I wasn't given a lot of choices. I was being told that I would either relocate or I was going to be out of a job. And this came on the heels of, about a 4-year period where I was working very hard, and I did, in fact, deliver the goods. I turned the organization around, and I felt that what I had done created a lot of value. And to be given an option that I had to go over someplace else that I didn't want to live and drag my family across the country and start over was just very, very unappealing. And I can remember thinking to myself then that I will never again pour my heart and soul into something that someone else can take away from me. So that's where my entrepreneur spirit just was born in that revelation, that epiphany, if you will, that you can deliver a lot of value and the game can be changed for you by other people who have different agendas. And I just decided I want to control my destiny going forward. And it turned out well, fortunately, but it was very interesting.
Yeah. And so having the burn the boats moment, launching the business early on, again, 2006, so if we go back in history in the timeline, then all of a sudden you launch a wealth management firm, and in 2008 and 9, I'm sure everyone recalls there were some challenges in the economy and the financial markets that were taking place. So
it turns out that starting a wealth management firm in the biggest global financial crisis since the Great Depression was not the best timing, but it actually worked in our favor and our advantage because, clients ask tougher questions about the path that they are on, their strategies, and how they got to where they are when times are tough. And while I didn't fully appreciate it in the moment because it was tough, that gave us an opportunity, gave me an opportunity to engage people in conversation where they were motivated to go deeper. They were motivated to understand better. If the markets had just been sailing along, they may have been more complacent and less receptive to a different type of conversation with a different type of a firm like ours. So that actually worked to our advantage, but it was difficult, and the challenges back then were notable because, like I say, the biggest financial crisis since the Great Depression, that's kind of a big deal.
And so when you reflect on your own just emotional health, mental health, going through the stress, the responsibility and caring for the client families you had at that point in time, how do you care for yourself going through that process as you're focused on the hard work that you're due day to day?
Well, I guess I wish maybe I had done a better job of that at times. I think I make mistakes just like anybody else. But for me, it was a sense of destiny or providence, because this was not a path that I had set out to take. So the idea that there's this push-pull between my intentionality and commitment and the sense of providence and doors opening for me at the very moment they needed to open did inspire me, and it kept me going through those difficult times. But it wasn't always easy. It's just how I approached it.
Yeah, and the nature of it, going to European financial crisis, to pandemics, and working through, there's a large responsibility, and yet there's the things you can control and the things that you can't control. And it's not easy is an understatement in terms of the burden you carry.
A couple of other, what I learned at that time, John, was a couple of things. One is that intentionality and commitment are so very important. I mean, you have to give things time to work. As long as you're doing the right things for the right reasons with the right people, you have to have a sense of commitment to let success find you in some respects. So the intentionality, we don't drift in good directions. You have to have a vision, and you have to have a sense of commitment around that vision, and you have to be patient. You have to let it work rather than just constantly switching gears to the next thing, to the next thing, to the next thing. And it turns out that was a good formula for success for us.
And then you go from the early years and having those moments early on where you've got the ups and downs, what you're controlling, and then all of a sudden, it's attracting, right? It becomes attractive. You had a vision for what the business was. It attracted my family. It attracted many others. Coming over to join you, we've continued to grow the team and the capabilities in our client base to 38 states, as well as over in Western Europe, with families that we serve. And it's all been through word of mouth and just the relationship building that's taken place. When did you go from the early years of being like, okay, is this an experiment? Is this going to work? Am I going to beat the odds that Forbes outlined? And then to step back and go, no, now we're into growth mode, and how you manage that inflection point.
So, John, I don't know if you recall the details, but I was doing an interview not long ago, and I went back and actually kind of looked at the timeline very carefully, and I can pinpoint somewhat precisely that was probably around 2011. Because in 2011 we had another debt ceiling crisis, not unlike the one we have today, but it went right to the 11th hour, and there was a lot of brinksmanship, and the markets didn't take it well. And by 2011, we actually had some assets, we had clients, and things like you say, we're progressing. And then this crisis hits, and the market goes down 2,000 points, and there was a lot of dust being kicked up and a lot of concern over where we were going with all of this. My moment where I realized that this was no longer an experiment had to do with my observation of you and some of the other people on our team. You guys didn't buckle. You believed in what we were doing, and so much so that our clients, in turn, believed in what we were doing. And even though that was a stressful, volatile time, for me, just seeing the things that I had hoped we would become actually play out in reality when we were really being put to the test was the moment, of course, where I felt like this is really going to work. Now, a couple years later, 2013, we crossed $100 million in assets under management for the first time. It was a big deal for us at that point. And we looked at each other, you may remember, because it was a moment of celebration, rightfully so. But things were going so well at that point. The saying that we shared is we're going to need a bigger boat. You know, we really felt that we saw, you know, the line comes from Jaws in the movie. And the first time they saw the shark, they were like, oh, okay, we're going to need a bigger boat. Well, we saw the success that was right before us. And we realized we were going to need to build the team. We were going to have to be even more intentional about the brand, our presence in the community. It was about that time we launched our foundation because that was part of our character. And then, you know, 10 years later, here we are managing well over $1 billion and advising on many multiples of that when you think of our client families who own businesses and have assets beyond just their financial assets in the public markets.
Right. Well, so you mentioned the foundation. So let's turn to philanthropy, giving, generosity, because this is where I am so inspired by the people that we have an opportunity to serve, are learning from them. I was on a call recently with, you know, holding company team members and the accountants and gift structuring individuals to figure out how we come up with the best solution for this particular family with the gifting of illiquid assets. So the generosity, the ability to leverage, the ability to be tax smart, right? The word philanthropy, philos and anthropos. Philos is brotherly love, anthropos is mankind, right? So loving your neighbor, loving mankind, giving back, the responsibility. And you felt a responsibility going, well, we've got this organization that we're creating, we're delivering great success, but we also want to give back to individuals that would never be our clients, right? I mean, there's a responsibility back to being a good corporate citizen, if you want to call it that, in turning around and helping in other areas. And that's when you started the foundation. Can you talk a little bit more about what motivated that, both for the organization and yourself maybe too?
Yeah, I and my family, we've always had a sense of philanthropy and had enjoyed giving and all of what comes with that, of course. But I saw an opportunity at the firm level to instill that into the culture of our organization. And so I went to our partners at the time, my founding partners, and basically made the case that we should put a stake in the ground and have a fixed percentage of gross revenue going into the foundation. Many of our clients, and this is still true today, of course, were at the time themselves philanthropic. And I saw an opportunity to even draw closer to our clients, the clients that I was thinking of at that time, in supporting the causes that they cared about. That would be obviously a good thing for the relationship and would deepen the relationship. I also saw an opportunity where our team members could be mentored and coached and helped to better understand even themselves the role that we have, our good fortune in the community and our success. I've always taught my kids, those to whom much is given, much will be required. And we were at that time really getting a lot and receiving a lot of good fortune. And it just seemed natural for me to formalize that and put the mechanism in place then that would challenge us and hold our feet to the fire each and every year to be good stewards of our charitable dollars.
Yeah, and both at the firm level and at the family level in terms of what you do personally, living that out. And now with the team's engagement into the foundation, we've got, your son James, right? Yeah. Who's one of the wealth advisors in the business. He's the executive director of the foundation on behalf of the organization, and he spearheads in what we call passion assets, those collectible areas, right? And he's got a definite passion behind him in an area, but how he's leveraged that back in with the community, where instead of just writing checks, we're giving multiples of just sending checks out from this event. Why don't you share a little bit about that?
So, John, just think of this. We've always enjoyed the aspect of our firm as the lines are very blurred between are we working, are we playing, that it really isn't a job. I feel like in some ways I retired 17 years ago, and I've got the world's best hobby. I get to do some things that I very much enjoy, that I'm mentally challenged by. I get to do it with people that I admire and respect, for people who I think are very appreciative of the value that we bring. But at times it's just a blur. What area am I working in? And is it business? Is it pleasure? And these relationships. When it comes to my son, you know the story. He really was very focused on becoming a part of the firm and wanting to follow in his father's footsteps and be an advisor. It modeled well. It was an appealing thing. I did my best to chase him away those first few years to be certain that it was a real passion for him. And he joined the firm, and he's grown, and as you say, now the executive director of the foundation, among many other things. But he has been able to bring something of himself to that mix. And every year now we host the Chicago's largest supercar show, all under his direction and his leadership, because supercars are his passion. Yeah. And in just a few weeks, we're going to have over 1,000 people in our parking lot at the office with upwards of 400 supercars on display, all for charity. Yep. And all to raise money for local causes, like you say, people who wouldn't necessarily be clients of ours or need to be clients of ours, but who we can have an equally positive impact on just in other ways.
Yeah, yeah, and and the team is so engaged. Yeah. The individuals that come around that, the people in the community that even look at the end charities and are like, I can't make it, but I actually want to contribute to that, because we underwrite all the costs of the event. So every single dollar raised goes to help people in the community, which again is leverageable. So the strategic nature of being able to give even more and have fun doing it, it's the greatest hobby. But you've never worked harder in your life on the greatest hobby that you've had. Yeah. So speaking of James being in the business, and one of the items we talked about, our industry goes through a lot of mergers and acquisition, as do a lot of our clients, right? In their entrepreneurial endeavors, they realize success and they want to have a liquidity and a monetization event that we help them navigate through. But we made the decision early on that this is going to be an intergenerational business to align with our intergenerational families that we serve. Can you talk a little bit more about that decision point of going from early days to growth and managing and living through the growth now, to also saying, no, this is going to be now an intergenerational organization?
So, John, so much of what has driven the choices we have made over these 17 years and continues to drive our philosophy and our vision going forward is the product of reverse engineering very simple questions with our clients and putting ourselves in their shoes and asking, what would I want in this matter or on this topic? And what I saw years ago was that the clients who invest themselves in us as much as we invest ourselves in them don't want to reinvent the relationship. And they especially don't want to have to start over with a new advisor or a different firm or a different philosophy, especially at a moment maybe when they are just about to retire or they've sold a business and they've got a big liquidity event. So it really became kind of a vision for us to say to our clients, we are not building this firm to sell it. You will not have to start over at some point in time just because I aged out or I want to retire or some of the senior people ready to retire. So we create this idea that then ownership becomes the big reward. And as you know, everybody in our organization is a stakeholder, a shareholder, has a vested financial interest in the company that continues to grow every year as part of our grant and bonus process. And that creates a very different feel. I think people sit up a little straighter. I think people take a bit more responsibility. They recognize that this is something that they are part of and it is important. Yeah. The work we do is important. Yeah. We just recently redid our purpose statement, and we said we exist to inspire and empower our clients to live with joy, confidence, and a spirit of abundance. Right. And I think that is so powerful, and to have it be something more than just words on a wall, right. To have us all kind of understanding that we together collectively are delivering this type of value, and we will then also enjoy the financial rewards that come with that. I think that's just a fabulous way to run a company. It may not be great for me to monetize the way I might if we were to sell the organization, but it is so much more satisfying to know that this company will be around for a long, long time and serve generations to come.
Yeah, and I think that resonates too with the families that we serve, because that's how they're living. They're intergenerational, right?
Yeah.
They're also working through estate strategy and their financial planning and what happens at family governance, business governance. How do you go through succession planning for them as they're thinking through these items? But we're also going through this for ourselves. And there's that saying that, if you want to go fast, go alone. If you want to go far, go together. But having partners, having other stakeholders, having other investors in the mix offers up its own challenges. That's not easy. So for our entrepreneurs that are taking that long-term view to say there is no turning back, we are going forward and we're going to be successful and we're going to do everything that we can to make that happen. There's no guarantees in anything. But if they're going to do that, to bring other people along is a challenge. So we just pause and think through dealing with partners, right? I mean, it's in our name, Clearwater Capital Partners.
Right.
You deal with partners, that offers up its own challenges. What have you learned through that process, both in, just in terms of that dynamic?
Well, I will start by saying I've been very, very fortunate, very blessed to have partnered with like-minded people. I would like to think that's not an accident. There was a lot of intentionality back in the day to be sure if I'm going to join forces with people, can I be with them for the long haul?
Yeah.
And so there was shared philosophy, shared values that went with that. But it doesn't mean that there aren't still issues or challenges along the way when there are, two things can be true at once and they not necessarily the same, right? I mean, we can have differing opinions and they can both be valid. So sometimes you have to do that reconciliation, get people back on the same page, but it's very, very worthwhile.
Right.
And I'd say that we are a very strong organization today from a leadership standpoint. We do present, a unity at the top leadership. You being on the board is a great example of that. Other people that we're bringing up within the organization are learning those values. And if we cultivate that, and again, we're intentional about it, I think it leads to many, many good things. But it doesn't just happen by accident.
Yeah.
You have to really pursue and invest in those relationships so that trust is always right there, and it can see you through times of disagreement.
In your economic research and your writing on behalf and for our clients and the way that we think about things, you've recently written, the era of cheap money is over, right? And hopefully it is because of central bank intervention around the world. But that cheap money also led to a lot of capital that was chasing opportunities. And mergers and acquisitions, even within our space, has been very significant at high multiples and just in flooding the world. But you have not taken outside dollars, and it's really been based on the value set of having people around the table that are like-minded in the values, not just because they're bringing capital to the table. Has that been tempting? Has that been a challenge? Has that been pretty clear-minded all along?
Well, of course, it's something you always want to look at because you see so much of it going on all around you. You hear some wonderful success stories, and then you hear of crash and burn situations where the culture is destroyed as a result of mixing the wrong people into the mission. I feel very passionately that we do not ever want to become somebody else. I'm very, very confident and comfortable with who we see ourselves as being, and the value that we deliver to our clients. And I do not want to risk messing that up. So I would rather be independent, move slowly, maybe grow a bit more organically and slowly. Although we've been growing quite rapidly,
Right.
We've been very fortunate in that regard. But I don't want to play Pac-Man and just buy a lot of other firms' problems and legacy issues that are not aligned to our way of seeing the world, and then as a result become something other than what we are today. So we're very, very guarded. What we have is precious. What we have, we believe, is very special, and no, we won't risk that to just simply pursue a financial transaction.
And so that growth as it's going, we continue to hire and add team members so that character and competency continues to come back, and that's adding team members in all aspects of the organization. So the managing of growth, the thinking about the next steps with growth for the organization, how are you thinking about that as you're looking towards the future, especially with it being intergenerational? It's not a monetization event. which then says, well, we need to continue to grow in order to provide the capabilities to serve our families.
Well, you're familiar with one of my other favorite sayings. If you're not scared, you're not having fun. So we're having a great time. There are some concerns around that. I think the biggest would be this notion that change is only accelerating. It's technological, it's cultural, it's societal. We just live in an era of very rapid change. As our good friend Brian Westbury says, things have never moved this fast before, and they will never move this slowly again. And I see that in every element of what we do. And I joke with some of the younger people, when I started in the early 80s, the way we entered transactions and sent tickets down to the floor of the New York Stock Exchange couldn't be any more different than the way we do it today. So I think about our industry and what it's going to look like 5 years from now and 10 years from now, and what type of talent or skill sets are we going to need to get today and to grow today to meet those future challenges. It's a daunting task, but I think that we've done a really good job of attracting really great people. Yeah. And as long as we never compromise and never negotiate around character and competency, I think we'll be okay.
Yeah. So if we move a little bit from the business as a business, from launch to growth phase to intergenerational structure that you've put in place, the value of that asset also sits on your personal balance sheet. And you also have planning on the family side. And a lot of times with our different client families, we look at it in terms of what's inside the taxable estate, what's outside the taxable estate. How are you moving these assets to get them positioned so that you're not selling the business, selling the farm, whatever it might be, just to pay taxes. The one universal I think we found with all the families we serve is no one likes taxes, right? So we can both reduce income taxes and estate taxes in the structure, and yet you now have a large and growing asset, right, as do the partners and hopefully all the team members in the future. You have this asset on your personal balance sheet that you're planning for. Mm-hmm. So we work with families in the way that they're planning, but you step back then and say, okay, but I'm also planning for how this fits into my family's overall balance sheet. You've got 2 children, one in the business, one outside the business. And I've seen it with a lot of our client families, is that they're so focused on growing and realizing the value in their businesses and creating the success that's there, that sometimes they don't pause to look up and say, wow, I've created a huge tax liability for my families that are ultimately going to have to fire sale some things if the proverbial bus came along. And so how have you been thinking about that, and what would be instructional back to some of the families and the entrepreneurs out there?
So John, you make a great point, and we live it every day. We learn as much from our clients sometimes as we teach them in how to navigate all of these things. But I can reflect on any number of clients who have done it really well, and you can see the fruits of their planning and their intentionality around how their estate ultimately plays out when they pass. And we have examples of families that were, like you just described, heads down and didn't do a lot of the planning, thinking that there will always be an opportunity or a day when they can get around to that, right, until there isn't. And the damage that can do. Money and wealth is fascinating in so much as it can be such a tremendous blessing in so many ways. It also, for some, can be a deep, dark curse. Mm-hmm. And it can destroy relationships, it can destroy motivation. And so every family's a little different in their money or philosophy, their money values. But for me, I've recognized that I really do have one child that is in the business, not child anymore, but I mean, right, who's making an incredible contribution. And the rewards that come with that contribution should be aligned in certain ways. But my daughter, who is very successful in a completely different industry, I want to provide for her, to share our good fortune with her the same. So we have been for a long time in a process, and it is an ongoing process. It's never quite finished, of just being, of thinking those steps through, of creating qualified trusts and other mechanisms so that our intentions can be carried out the way we want them. I say ours, my wife and I together. And to not do that is really such a terrible legacy to leave your kids. Yeah. Because you've seen it, I've seen it. it can be a tremendous mess that untangling can take years, with a lot of acrimony and a lot of division in the families. So it's about having a plan, keeping the plan current, understanding how the plan connects to your values, and making sure that there's always that alignment and transparency and communication so that things don't go south.
And so you hit on something in there, right? You and your spouse, Julie, that you're making these decisions together. Somebody once said, spousal unity trumps everything else, especially if it's not an individual person that's the assets holder. In subsequent marriages, that gets more complicated for individuals too, as they think about the businesses and wealth created as they come into that. As you approach that together and you think through that together, you said Julie was the impetus actually and the catalyst for you starting the business. Julie and you make decisions together as you navigate these. You give together. You support her work that's there. And we're two guys speaking of these topics. And yet we know from just from literature in the industry and the statistics that most guys go first from the life insurance companies. And more women are going to start controlling wealth in the next decade than men will, right? So if they're going to be controlling more wealth and the intentionality of women in wealth, and something that we've talked about that, how do you incorporate that with the client families you're serving? How do you think about that in terms of the firm's capabilities and are serving a changing demographic and what I'll call the diversification of wealth just across the demographics?
Well, and John, this is a huge topic for our industry because our industry has not done a good job over the years of bringing women into key roles within the wealth advisory business. They've not done a good job of making sure husband and wife are at the table in the conversation. Sometimes the spouse may not really have a strong interest. We're both married to artists. Right. And they don't really have the same focus or regard for money. They of course enjoy what it can bring them and can do for them, but they don't think about it the way perhaps we do from a planning standpoint. Yet they still need to be part of the conversation. When I think about it, what all of this means to the firm, as you well know, we've been extremely intentional in the last few years to develop excellent, talented women on our team at all levels. And we will continue to do so because I think we need to look and be able to communicate with our clients, look like our clients and communicate with our clients in time. And more of these decisions are definitely going to be made by women who lead their families in many different ways.
Yeah. And our daughters are going to keep us accountable
to
that
will.
too.
They certainly will.
As they go through. There's a few things I want to hit on, a little bit of a rapid fire basis here.
Okay.
You read, I think Katie in our office has said it, but you read just so much and very prolifically. What's your favorite book, your favorite author? Who do you follow that you'd recommend for others?
Wow, that's a more challenging question than you may know. I have so many varied interests. In fact, Katie was introducing me the other day to a group I was speaking to, and she was kind of making fun of me a little bit, all in good fun, but talking about how I'll read books in science, or I'll read in economics, of course. I'll read for pleasure. I read a lot of books, but if I had to pick one that does stand out, and you'll understand why I choose this one to share with you, it would be David and Goliath by Malcolm Gladwell. And the reason for that is I do believe in so many ways it is the story of our firm. We like to think of ourselves as the David in a world full of Goliaths, whether we're up big, wirehouse firms or big banks, in a competitive situation. And the way Gladwell unpacks that story was very different from what I recall in Sunday school as a kid. We thought, well, poor David, Goliath's just going to crush him. And what Gladwell walks you through in his retelling of the story is that was really the opposite. It was poor Goliath. David was more nimble. David was using new technology. David was not married to the old ways of warfare. Mm-hmm. And as a result, David had all the advantages. So that book has always been special to me because I do think it parallels our own journey at Clearwater Capital that we have taken on the Goliath so many times and we have prevailed. I would say that one does stand out as been an all-time favorite of mine.
Yeah, I don't think you can go wrong with anything from Malcolm Gladwell,
Yes.
right? I mean, just a big fan
Yeah.
as we are. But I agree. I think that book, and that actually gets reinforced through when we were invited into the Family Wealth Alliance with all these other multifamily office wealth management firms as they're processing how they serve their families, how they've done that, for not only decades, but over centuries in terms of how they turn around and serve. It is what families ultimately desire when they dig into this subject and what they're looking for. They're looking for David. Some people, want a big name on the door, and they can get that. But when people really study it and they want to dig in, they want David instead. When you find a break, do you re-energize to recreate, to clear your mind, to get away from the office? How do you do that?
Well, I've found my Walden Pond. Henry David Thoreau wrote the book on Walden Pond, in the 1850s? And he so eloquently describes the tranquility and the peace that he finds there. About 7 years ago, Julie and I managed to find a piece of property in Michigan's Upper Peninsula that has become that for us. So we love going up there. I have a lot of flexibility with my schedule, and I can work remotely in some of the things that I do. So we try to go up there, each month in all the seasons and really enjoy just the tranquility and the peace of the great North Woods.
Clear your mind
Yeah.
and get ready to do it again.
Yeah.
So most memorable meal?
Most memorable meal. Well, it was a great meal, but I almost got thrown out of the restaurant. My son and I, James, were in Paris some number of years ago, and we weren't far from where Moulin Rouge is, and we found this beautiful, kind of a hole-in-the-wall Italian restaurant, and we went in, and it was just so authentic, and the experience was so rich, and the food was just fantastic. But I ordered pasta, of course, and being the American that I am, I thought it was a good idea to ask if the server could bring Parmesan cheese, certainly not knowing what a great offense asking for Parmesan cheese at an Italian restaurant in Paris would be to the chef. And she said, no. And I thought she was kidding me, right? Because, and again, in America, you're accustomed to whatever you ask for, you get. And she said, no. And again, I thought she was pulling my leg, so I pushed a little harder, and she nearly took the plate away from me and threw us out of the restaurant. But we ended up settling that difference and had a wonderful meal, but that was a memorable one for sure.
What advice would you give to other entrepreneurs, John, that are maybe early on, maybe looking at a transition themselves, starting out in their early years of starting a business?
John, I really do think it is the alignment of not only having a clear vision, find something that really can be life-changing or something that really is meaningful. Do the right things, because there are the right things and the wrong things with any endeavor. Do the right things for the right reasons, because motivation is a very important part of the equation, and with the right people. If you can attract and align yourself with other great people who have a similar vision or similar conviction, it's hard to go wrong. I'm not saying that things can't go south,
right.
But if I had to offer any advice or a formula for success, it's do the right things for the right reasons with the right people, and I think that'll carry you a long way.
There's so many more items we could talk about and go through, and we'll have to on another day to share from our learnings together. It's been a ride. Actually, I need to thank you for even posing that question to me back in 2008.
We only tell people you hung up on me. That wasn't true, but it did take you some time to come around to the idea.
Absolutely.
And as I say, and I know you say it as well, if I had known earlier in my career what I've come to know now, I would have done this much sooner.
Yeah.
But the reality, that's not how Providence works. I needed that preparation. I needed the first 23 years in a career that was varied and took me in a lot of different directions. I would assume that is true for you as well, in order to be prepared and able to do what we do really well.
Yeah.
And so I'm very, very grateful. But it has been a great ride, and I'm fortunate to share it with you and others. And this has been a lot of fun. I've really enjoyed it.
I wouldn't do it anywhere else. And frankly, anybody that's interested in talking to us about that too, we'll have that conversation, because this is a life worth living, and the opportunity, you hit it. We learn from the people that we serve. We get so much, right? Which is why we're so willing to roll up our sleeves and to give and to serve them to the absolute best of our ability and our team's ability, and do life together with the people that we serve. And thank you.
Well said.
Thank you.
All right.
Thank you to everyone who has listened in today. If you want to follow up the conversation, if you want to continue the conversation, please drop us an email at clearconversations@ccpwealth.com. Thank you again, and have a wonderful day.